and welcome to It's the Economy. On Wednesday, Reserve Bank announced a bunch of strict rules governing how banks will sell financial products like insurance or pensions. Not only are banks forbidden from coercive selling, tying to a customer, to a loan customer, forcing him to buy an insurance when she wants, just to open a savings account or take a loan. Banks also have to assess if the product they are selling is suitable to the consumer. Like, you can't sell a life insurance product to a person who's over 60 years old and perhaps who's not earning. So, will the strict new rules impact banks' fee income? Also, will the sales volumes of insurance and pensions companies dwindle because of these stricter rules? I have with me two stalwarts, Mr. Dinesh, Khara, former chairman, State Bank of India, and Mr. Nilesh Sathe, who was formerly with the IRDAI, so a regulator and the chairman of the biggest bank. Gentlemen, thank you very much indeed for your time. Let me first start with the stock market question, Mr. Khara. Will this mean a loss of revenue? Because when a loan was being tied up with an insurance product, the banks were getting a small slice of that premium as a third-party fee. So will this mean a loss of money for banks, and which banks could be affected?
Well, Latha, when you talk about the loss of income for the bank, yes, when it comes to, the cross-selling income or the CV income, which we call it, normally insurance would be comprising about 20 to about 30%, depending upon which bank it is. But yes, of course, so it is actually not prohibiting as it is, but it is only saying that the right practices should be followed by the banks when it comes to selling the third-party products or the insurance products, and there should not be any bundling. So essentially, what it really calls for is that there should be right assessment of the product, showcasing the product, and if at all it's not a mis-selling, if it is a right selling, then there is no restriction per se. So I think to that extent, yes, of course, when it comes to the insurance income, distribution income for the banks, when it comes to their other income, maybe it will be comprising about 20 to 25% or so. But yes, of course, not every penny will go away. But yes, of course, it is only ensuring that it should be the right selling. And when I say so, I must also mention...
How much of that 20 to 30% could be these kinds? I mean, there will be genuine insurance policies also that a bank will sell. And then there will be these bundled products. So out of that 20 to 30%, how much may be bundled income?
I think I would say that when it comes to larger banks, they had already started practicing in the manner that there should not be any bundling. Okay. So what was actually happening was that at the same time, it was also being insisted upon there should be right profiling of the customer and showcasing the product with the value proposition to the customer. Yeah. So I think many things have happened for the last couple of years. And many of the right practices have already been followed by the banks. But yes, of course, now with this kind of a norm which is being prescribed by RBI, it actually goes a step further. It also says that if at all there are any exceptions, then once the mis-selling has been established, it is premium need to be refunded.
Yes.
Whatever income has been made, that has to be refunded, and on the top of it, it can have impact on the license also. So I think this kind of a guideline has gone a step further in terms of the implications which should be there if at all these policies are not put in place and practiced on ground.
Got it, sir. Let me get Mr. Sathe. Mr. Sathe, what about the insurance companies? There was actually a statement from Max Life Insurance saying that their sales numbers will be impacted. Was this a large part of their job? Bank assurance itself is a very big vertical for them. So what is the impact? I'm only talking revenues now.
Yeah. A few of the insurance companies which have greater bank assurance business, they will get impacted initially. But then I am of a view that this is a welcome step by RBI because there was no guidelines issued on especially mis-selling. Definition of mis-selling has been given. What is dark patterns, what DSAs and DMAs should do and should not do. Mis-selling is defined properly in advertising and marketing. What is all that should be done? It is well defined. Moreover, Latha, these are draft guidelines. Public comments have been invited up to 4th of March and they will be effective. Guidelines will be effective from 1st of July. So still time is there for banks and insurance companies to have proper things in place. So that is good. But initially there is a possibility that some of the bank's business may get impacted. But on a long run, I think it is very, very essential. It was essential and it will benefit the customers, the banks, as well as the insurance companies as a whole. So this is my view.
Yeah.
And,
no, I'm taking your point entirely, sir. I mean, I have in my lifetime taken 2 home loans and I was not insured for either. I actually prepaid most of them. But now, it seems to become a common practice, especially if it is a, SME or a business loan. The insurance is maybe demanded, maybe bundled. We don't know whether people can refuse. But my short point is, you think that sales can be impacted for insurance companies, at least initially?
May get impacted if they are not well prepared. But 4 months time is there. So, and what is required is proper assessment of the risk. Moreover, giving option to the customer to either buy the product from other insurance company on his own or giving a presentation of more than one
Yes.
product. And it is not applicable just for insurance. It is applicable for all financial products, including mutual fund. So this is a good welcome step, mutual fund, NPS and everything. So proper assessment of risk profile of the customer is required to be done. That should be recorded also. There should be a proof.
Yes.
And the internal audit department of banks should evaluate whether it is properly done. So these are the really good steps which RBI has taken.
Yeah, fair enough. No, I mean, no denying it. I've never seen such a comprehensive overhauling of rules. This is the first time that RBI has come out, and they've quickly followed it up with more rules on recovery agents as well. So clearly, customer at the center of the focus this week, at least for Reserve Bank. Mr. Khara, do you think that banks will be forced to follow completely to the letter? There is a supervisory bandwidth also. How much can they possibly do? There are a lot of gullible customers who wouldn't know that they don't have to buy the insurance along with the loan or along with the deposit that they're opening. So is there a limit to which Reserve Bank can even enforce it?
No, I think, Latha, when it comes to the vagueness of banking, which is actually a vagueness of trust. So if at all the banking in long term, unless and until they enjoy the trust of the customer, they cannot really exist and survive. So I think it will be a very conscious effort on the part of the banks as it is, because even in response to the moral situation which was there in the past from the regulators, banks had come out with the policies which were in line with what was intended. So I think my sense is that even if the regulator has got limited bandwidth in terms of ensuring oversight, it will be incumbent on the part of the bank management itself to ensure that there are right policies in place and they should be effectively governed also on ground. So I think, to my mind, there will be a voluntary effort on the part of both banks, even insurance companies which are availing this route of bank assurance. And also, eventually, I think when all the three will work in tandem, insurance companies, banks, and the regulator, eventually the customer's interests will be taken care of. That is what my sense is. And I would say that in the past, we have already seen it happening, and it will be further strengthened because now it very clearly defines what the mis-selling is and what are the implications if at all things are not followed to the T. I would say that even beyond the banks, there are many NBFCs also where actually this kind of a bundling was a reality.
Yes.
So I think maybe they will also really come in the purview of this particular guideline once it is implemented.
Yep. Oh, absolutely, sir. I mean, I know even for deposit products, happened to a relative of mine who was going abroad for about 10, 15 years and wanted to put his gold or his jewelry in a safe deposit. He had to open a savings account to have the locker. And he was told that, no, you have to buy an insurance. He said, I'm not here for 15 years. What will I do with an insurance? But no, you can't open a savings account unless you take an insurance. There were these predatory practices. Mr. Sathe, you pointed out that this is open for advice, open for feedback. What changes would you ask?
A couple of things need to be clarified. First is within 30 days, a full refund is stipulated here. IRDA has a cooling off or free look cancellation policy in which full refund is there, subject to the term for which the insurance has already been used or availed, and the medical fees and the stamp duty which has been paid. Now, these are some of the things which the insurance companies, the banks, and of course the RBI will have to sort out as to who should bear this.
Okay.
Because as per IRDA, these are to be borne by the customer, these expenses, even if there is a free look cancellation in which the policy can be cancelled in 30 days. So these are some clarifications which are required. But one thing is there, it will be a great ease of doing business for everybody, for the customer as well.
Oh, yes, absolutely.
And when second is about mutual fund also, like after a month, if the NAV has gone down and RBI wants full refund, whatever has been invested, then again, who should bear that loss? And mutual funds are not there to bear this loss, definitely, because investment risk is passed on to the customer. So these are some of the things which need to be clarified.
Fair point.
But otherwise, it's very good guidelines. They were long awaited. And Governor had announced it in the last press conference that they will be issuing these draft guidelines.
That's right.
It's a welcome step, no doubt about it.
That's right. So, spoken like a regulator yourself in terms of the gaps. Mr. Khara, just 30 seconds, sir. Any suggestions?
Well, I think I tend to agree with what Mr. Sathe is saying. At times, what happens is that when at the point of time when the selling happens, the customer seems to be inclined. But later on, when they go back and have a rethinking, then they would like to exit out of it. And that is the reason why the free look-in policy, free look-in period is permitted. So I think such kind of instances should not be treated as mis-selling.
Okay.
They should be actually treated as only change of mind. So I think those kind of things have to be kept in mind because having said that, I must also mention that bancassurance has been a channel through which the distribution of insurance has actually improved. If we really look at it, just about 4% penetration level, of course, it needs a lot to be done in terms of distribution. The channel should not be condemned because it has actually created value. But yes, of course, having said that, there should be enough checks and controls to ensure that the malpractices should not be encouraged.
Fair point, sir. Thank you very much, Mr. Sathe and Mr. Khara, for enlightening us of both the positives and the cautions on this new set of rules. But both of you are giving a AAA to the Reserve Bank for these new set of rules. Thank you very much for joining us. Wrap up on Bazaar. Chartbusters coming up.